Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M by 1M, as you know, is the first global virtual accelerator for technology startups. No matter what corner of the world you are in, we can work with you. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. This is our 696th free mentoring roundtable. We've been doing this for a very long time. 2008 fall is when we started experimenting with online mentoring, and that was long before virtual became the norm. You know, at the time it was unusual, now it is the norm. So now the market has caught up with us. And over the years, more than 300,000 participants have been at these sessions. We've had the opportunity to work with, interact with, learn from entrepreneurs from literally all over the world. And as most of you who are regulars in these sessions know, we also invite investors to participate and tell us what they like to invest in these days, what their investment thesis currently is. As the market moves, new trends come into play, we see investor thesis change. And that's what we're going to do first. Today we have Marina and Nick Davidovs, co-founders and managing partners of DVC. Welcome, Marina and Nick. Good to see you.
Hi, thank you so much for having us.
Good morning or good day.
Where are you joining from?
We're in Los Altos, California.
Okay. All right. Tell us a bit about yourselves, your backgrounds, as well as what you're doing with your fund.
So Marina and I are like a husband and wife couple running a venture capital firm, and we've been working together for the last 18 years. Multiple startups, multiple funds. So changing sides of the table quite often.
And what kind of startups have you been active in? What is the background?
So that one thing that we are very constant is our thesis, and doesn't matter is it startups or funds. We've been investing and doing AI for the last, I believe, 12 years.
Yeah. So last 12 years, AI startups, AI, like funds investing exclusively in AI. So yeah, we haven't converted from crypto last year. Yeah, it's not us.
All right. So let's double click down on that. What is your AI investment thesis?
So you mean quick background. So we started. We fell in love with the technology about 12 years ago. We were big investors in advertising technology, and that was one of the first real life applications of machine learning. And we basically try to find a way for companies to figure out who their target audience is to target them better, because truth is 90% of companies don't know which customers are their target customers, and everybody expects them to know. Like Google advertising or Facebook always starts with like, explain who you want to target, assuming that they know, which they don't. And I don't know who my target audience is. I can only assume that. But if we collect as much data as possible, like throw it all in a machine learning pipeline, we can expect a machine to figure out which links and which dependencies are more relevant and which are less relevant, and then figure out, and maybe my target audience are people with red hair. And I would never think about it. So we started experimenting with that. Some of our products were incredibly successful. And then we just realized how much potential that gives. And the potential comes from ability to boost human productivity, labor productivity, by connecting computers to every single part of human society, of human civilization. So initially we thought that maybe the best way to connect it would be computer vision, to make computers see the world, because the world is so complex, and you know, our visual cortex is so much bigger than our audio cortex. However, what we now know is that since we as humans have described every single part of human civilization by using language, we can use language as a great medium and the universal API, we may call it that way, for every part of human civilization. So we can use artificial computation to boost our own productivity in everything. So our thesis is application layer. We do believe that foundational technology is, of course, very important and very valuable, but it's a high risk, high return, high capital intensity investment. Whereas we like to invest in something where you can do a lot with very little, and that is usually application layer.
And what is the size of your fund?
So we have two funds. One is 40 million in committed capital, and it's doing pre-seed and seed, and it's backed by 165 LPs who are themselves engineers and founders in Silicon Valley. And our second fund is 75 million in size and is doing Series A.
Okay. And you are based in Los Altos, California, which is in the heart of Silicon Valley. What is your geographical radius of investment?
As far as I can see out of the window.
Yeah?
Yeah, there's definitely enough startups in the neighborhood.
So you invest only in the Bay Area?
Yeah,
Mostly.
90%. We do have a little bit of London, a little bit of Cyprus, a little bit of Portugal, but 90% is here.
Largely here. Okay.
Yeah, but
And
yeah, and we also invest mostly in repeat founders because we also believe that in a very changing environment, your experience and background matter a lot. And you have to understand that you have to try hypotheses very quickly, probably pivot a lot. And repeat founders usually do have this experience.
you are not the only people who only invest in repeat founders. The bulk of the venture capital industry invests only in repeat founders.
Well, they
So
try to.
It's always very hard for the first-time founders. We help a lot of us first-time founders. It's really hard for first-time founders to raise money as a result of that. So I'm going to double-click down on your AI investment thesis and start asking some more specific questions. Let's start with a question that is floating around in the LinkedIn has become the water cooler of the world, right, these days. So you get a lot of the pulse of what questions people are asking through LinkedIn. One of the questions that came up the other day, and I was thinking about it, and a lot of investors who've come here have said this, that, oh, we don't like to invest in wrappers on top of ChatGPT or Gemini or whatever, whichever LLM they choose to have on the back end. Now, there is truth to that. There's reason for that. There is, primarily defensibility reasons. Primarily, what is your moat? How do you differentiate long term after the first wave of customer adoption is done, and lots of competitors come into the market because it is easy to launch something. What is your perspective on this? And I will caveat this question by offering you an example that is a huge and hugely prominent success story of recent times. It's Lovable. Lovable is a wrapper around ChatGPT, and Lovable has built a very fast growth, extremely impressive company, $100 million in about 8 months, I think. And they do vibe coding tools, right? They do really no code application development, and it has lots of competitors. There are tons of competitors in that space. Recently, there's been another acquisition in that space. Base 44, solo entrepreneur, was doing a similar product that got acquired by Wix 6 months into the game for $80 million. So it's a very active space, but it's a good example. It's not the only example. It's a good example to kind of make our discussion visceral for people who are listening. So let me hear your thoughts on how you are thinking about.
So a wrapper has become, and just to touch on your first comment, I think LinkedIn is really like a water cooler of the world, but the problem is that this water cooler is in maybe procurement department or like an accounting department. It's not the C-level floor. It usually, the news is like late by 3
That's
weeks
not
there.
true at all. That's not true at all. I don't know whom you follow and what you follow, but the entrepreneurs are on LinkedIn in droves.
Twitter's number like one and like where things happen. But yeah,
I don't agree with you at all, actually, on that.
but yeah, so wrapper is a derogatory term that is used for application layer startups. But if you think about it, ChatGPT is a wrapper of NVIDIA, and NVIDIA is a wrapper of TSMC, and TSMC is a wrapper of silicon. Same as Amazon S3 is a wrapper, like Dropbox is a wrapper of Amazon S3, and Amazon S3 is a wrapper of, again, storage and cloud. So it's just a wrapper. Really, what I call a wrapper is when you take ChatGPT API and make it available through, let's say, Telegram chatbot. And maybe you throw in a couple more APIs there, and there's no UI, no value. Think of large language models and foundational models in general as operating systems that people have to interact using a terminal, which is not a very good UI. And if you have built an experience on top of that, then it's no longer a wrapper. It is an app, same as, an app in the operating system. One of our most successful investments, Perplexity AI, has been called a wrapper numerous times. But look at them. They have their own search. They have their own models that are used for search and presenting the information. They still rely on large models that are using reasoning and stuff from like others, but it also is their incredible advantage that like no matter like Grok or Claude or like GPT-5 is the best today, you can choose it through Perplexity to use reasoning.
That's a very good example to double click down on. Let's do that. What do you think is the secret of Perplexity's success? What is the profile of the customer who's using or user who's using Perplexity?
So it's mostly a knowledge worker who is working with information retrieval and analysis most of the time. And from there, it penetrates other parts of their life. And for me, Comet, the browser, and Perplexity itself has become irreplaceable. There's a very good test. It's like, how much money would your users pay you not to take your service away? And I think back when Perplexity just released their search, my number was $2,000 a month. That much I was ready to pay not to lose access to Perplexity. And that was why we very strong believers. Now, the secret of success is that Arvind and the team, they focus on things that don't change. In the environment where everything changes every week, and in the last 2 weeks we had more progress than in the last 2 months, and in the last 2 months we had more progress than in the last 2 years, and 2 years more than like 20 years. And the only way to persevere through times like this is focus on things that are not going to change. Users are not going to look for a slower product, a product that is less accurate, a product that is less enjoyable in the experience. So you focus on quality of the execution and speed of shipping things that work. And then strategy-wise, they're doing very good moves because we all understood that prompt engineering is very important for large language models to get you good results, right? But then what Perplexity understood, and probably they understood it the earliest, is that it's not about prompt engineering, it's about context engineering. The context that is presented to the large language model vastly determines its output and output quality and usefulness of it. So if you present it with more relevant context, giving it might come from search, and having a search that is better than Google for LLMs is very important there. But also it comes from the user creating this context. And it's it's not great to just expect users to provide like 2-3 pages of context in the prompt. But what you can expect is that if a user is using your browser, and if a user has an app, then you know which sites the user has seen, you know which logins they logged into, like you know what's in their LinkedIn account because they're logged into LinkedIn with the browser. You can do things there, and you can use these things to provide better responses, not to target ads for the user, but to understand what they actually need. So when I say, hey, get me another tuna bowl, it knows what tuna bowl, which restaurant, and which delivery service I'm talking about, and like how to pay for it. And it's like what it does, it just sends me the tuna bowl.
All right, let's change. I think if I were to summarize for people who are listening and maybe are not as far along in following what you are saying, there is, and Perplexity is not the only LLM that is offering this. I've seen it elsewhere as well. There is a lot this is a very useful feature, which is related questions. And this talks to your point about prompt engineering and context engineering. When you start working with Perplexity and start asking questions, it's going to give you a lot of related questions. And that's very helpful in navigating. You don't have to design all the prompts yourself. You're basically prompted for prompts, and that's helpful, that's productive. I think you're saying that this is not something everybody else is doing, but is it that difficult for everybody else in the LLM world to do?
Not that difficult. It's very difficult to do it right. It's very difficult to do it like with the speed that they're doing, and so with the quality. It's like if you notice, if you take a look, every time there's a new model released, let's say a new open weights model appears on the market, and it's just the paper is 3 hours old. Perplexity already has it built in, and their time to first token is incredible. So like the way they host models, the way they do everything, it's just like unreachable for the majority of companies. It's like, so just focus on shipping, focus on two things: create the most enjoyable possible experience for users, and make it the fastest, the most like highest quality, highest accuracy, robustness, technology and business.
So let's come back to the wrapper question. You started off by saying Perplexity is a wrapper on top of other LLMs and so on. So we went down the Perplexity path. Perplexity is a very high capital intensity product to build.
It is not. It is not.
Okay.
It is very lean. It is very lean. So if you compare how much money they raised, and like they haven't spent much of it, they still have the majority of the money they raised in the bank account. That's their superpower. So OpenAI has to spend $200 million to train a new generational model, but it's like Hollywood blockbuster business. You have a chance that your movie is gonna score the box office, but the odds are it's not. And even if it does, it's gonna be around for like 2-3 months, and then like a new movie is gonna come out, and everybody else is gonna go see the new movie. And the problem with that is that they need to get to a scale where they can distribute it and recoup the investment in like 2-3 months. While Perplexity enjoys very lean, like they don't burn money on compute for training models. They don't burn, like it's minimal. They don't burn money on anything other than basically what users directly pay them for. Plus they are closer to the users, so they can like get more. The rule of thumb in business has always been be closer to your user, be there like your user's first screen, and you will control where user is directing the money flow.
So then here's another question, related question, and this has also come up in the context of this new lovable funding. Lovable has just raised a huge amount of money. It didn't need to raise any of that money. It was doing great. It was, growing
Was
really
it?
fast. Pardon?
I mean, like, was it?
It seems like it.
But
$100
have
million.
you like? I don't know what their profit margin is. You see, the problem with coding is that the majority of players in vibe coding are negative margin.
But this is a paid product. This is not a free product.
Yes, it is not a free product, but the problem with subscription-based products is that you have users that burn way more tokens than you get paid for.
Well, but that's a pricing model question, right? If you do a pricing model that covers your costs and creates if you are
Like, I think Lovable is a
dumb-
great
if you're-
company. Like,
if you're
don't get me
destroying
wrong.
your unit economics, that's your problem. That is not,
But
going
take a look
into
at
business
Cursor.
by destroying your unit economics is no way to do business.
But take a look at Cursor or Windsurf. All of them negative margin.
So I think this is a very good question, very good point that we have arrived at organically in this discussion, which I think users should, the audience finds value in that. Silicon Valley has always had this disease of poor unit economics businesses that are, venture capital subsidized, like we call it venture welfare kind of. Why would you do that? And why do you expect to build a sustainable company in this mode?
It's land grab. You're always looking for openings in the market that can utilize to penetrate it. And then once you pass a certain threshold, the general belief is that you'll be able to use all of the momentum, brand power, distribution that you gained, and money that you raised to actually secure like a healthier. Uber is a great.
I don't believe
Amazon has been losing money for like 25 years of its history. Look at Amazon.
But Amazon has never worked on flawed business unit economics. Never.
Amazon has been losing money for 25 years.
It has been losing money, but that is because it has bought growth. It has not operated on flawed unit economics ever.
That is like, where do you draw a line? Where's buying growth versus flawed unit economics?
Okay, so this is not where I want to go with this conversation. It's 8:22 a.m. I only have another 8 minutes to work with you. So let's actually.
I think that's a pretty important topic for founders. It's like, how do you decide like whether you subsidize
it is an important topic, very important topic, and it is something that, so in 1Mby1M we operate with the philosophy of bootstrap first, raise money later, and preserve proper profitable unit economics all along. Otherwise, you would not be able to bootstrap. And why? Because of what you said when you came into this call to start with, is that you don't invest in except for repeat founders, you don't invest in first-time founders. Our audience is largely first-time founders, and these first-time founders have nowhere to go other than bootstrapping and building sustainably and then getting to success, and then they can attract money. They can attract money with a solid business. They cannot necessarily attract money up front.
You see, the funny part is that the definition of a repeat VC-backed founder is that they have raised VC money before. So they have raised the first check, being like first-time founders. And I raised my first check when I was a first-time founder, and Marina raised her check when she was a first-time founder. It doesn't mean that they have to be bootstrapped. There's the majority of VC funds invest in first-time founders. It's just maybe they're not ready. Maybe they're like the company is not ready.
Yeah. So how do you get ready? To get ready, you have to validate your business and get to readiness.
But you don't need $1 million ARR to raise VC money.
A lot of VC funds do ask for $1 million ARR before they write a check.
But again, you should raise from angels, not from funds, like from smaller things. This is if you go and talk to investors.
Anyway, we've been doing this for 15 years. This is a world that I know very well. And we work with very large numbers of founders, and a vast majority of them are not ready to raise capital. So they have to somehow put one foot before the other and make progress and get to fundability. Our world is full of people who are not fundable. and they have to be taught how, or they have to be somehow given the tools with which to
Oh, yeah.
That's
with,
true.
they can move one foot before the other. But I actually have a much more interesting question to explore with you, which is, we talked about Perplexity as a wrapper. Give me examples of other interesting wrapper companies. I think these wrapper companies are actually very easy to bootstrap and very, very desirable for people to build, you know, revenue on top of very quickly. So give me more
Yes and
examples
no.
of what you're seeing.
Well, we have 125 portfolio companies, out of which 72 are agentic businesses, which you might call a wrapper.
Okay.
So we can name all of them, but the problem is that it's not easy to build them. It's not easier. It's just a different business from building a foundational model from scratch. And I don't think people need to build more foundational models because it's just a
I don't think
commodity.
we need more foundational models. I think that's done. That's happening.
Oh yeah, it's like we're building a car and we're gonna make our own oil. But with great niche products that are not expensive to kickstart, we just announced the round of Key, which is software for due diligence. So private equity funds do a lot of due diligence when they buy companies. They have a similar set of questions, and the guys have created a beautifully designed agentic system, plus a little bit of like data room software. It took them roughly 3 months to get to 3 million in ARR.
Wow.
And they went through Y Combinator and raised a beautiful 5 million seed round after that. Solve Intelligence is a beautiful agent that is building solutions for patent attorneys. So it like agents that write patents for you out of technical documentation. They are doing pretty incredible. Fleetworks is a company that uses agents to schedule freight dispatchers. So it calls drivers, negotiates with them, gets them to take like payload from point A to point B. Avoca AI is another incredible breakout success from our portfolio. They do like AI salesperson / CRM for contractors, people who install like, electricians, people who install HVAC equipment. They don't have time to pick up their phone. They don't have time to speak to customers. So like AI does that for them and just like puts appointments on their calendar and tells them what to bring. It is really, really cool. They're incredibly successful. Kick.co is AI bookkeeper company that Marina and I used for the last 2 years to file our own taxes. They're growing incredibly well. Eloquent AI
Let me ask you a question. In the ones that you are seeing really, taking off, if you put them in 2 buckets, one is PLG, product-led growth, which in the case of the companies like Lovable and Base44, that has been really the driver. And I suspect some of your companies in this pool of 72 are probably following that path.
Yeah, including Perplexity, yeah.
Including Perplexity. And then there is also, enterprise applications. I suspect the private equity one is more of a, it's not exactly product-led growth. There is a sales cycle attached to it.
There's always an element of both, but yes, sometimes it's I think for our fund, it's 50-50. Where like the 50% is the majority product-led growth and 50% is like you take it and you sell it. And but a lot of times, once you start selling something that people love, like if you sell something to HR people, they all talk to each other. If you sell something to IT people, they all talk to each other. So like there is some element of product-led growth there.
Some element of word of mouth, yes. Yeah. Now, to the extent that you have adoption inside of enterprises or businesses, let's say, what are you seeing? Are you seeing human in the loop, or are you seeing human replacement?
You want to take this?
Yeah, we've seen both, but in terms of enterprises, it's very important to understand that we see a lot of growth in sales for like startups because enterprises are pushed to actually implement AI right now. The problem is most of the time it's done not from not from the budget that is like long term. It's
It's a pilot.
It's a pilot. It's experiment budget. So we can see that yes, a lot of enterprises start using AI agents, AI in like different tools, but probably it's not long lasting. And it's misleading for entrepreneurs most of the time because they like calculate it in the IRR and show as a growth, as a steady growth.
And how does that inform your investment thesis then?
So we try to disregard pilot revenue if we don't see how it gonna stick. So the problem is like when you look at a company that got like 300K revenue from Netflix, you know that Netflix just gives 300K to anything that seems valuable to them, just to try it out, because for them that's a rounding error. It's basically zero. And we try to look into the product. We try to find, so usually like one of our LPs would be like a user of the product, and that's how we would actually know about the company, that somebody's like started to using something for like data compliance in their bank, and we're like, oh, okay, we want to talk to the founders, can you introduce us? So this is how we discover startups most of the time. A lot of times companies are experimenting with two things. So they experiment with open source and building stuff on their own. And at the same time, they would try a startup. So they would like run a parallel test. Because it's very hard for management to figure out like whether like their engineers are right and like they can just open source it and have it run on-prem and not depend on like any other company, or maybe their business is right and like they need to buy it from that fancy startup. And so we have quite a lot of investment in open source technology. And in terms of human in the loop, I'd say there are four categories actually. So it's human doing, AI doing, or human managing, AI managing, and then like this four can intersect in very funny ways. But we have an interesting company called Copilot Kit. They specifically do open source frameworks for humans in the loop, and there are just different kinds of processes where AI can work and replace both management part and work part, and then there are places where it cannot. And usually we have this like three questions that we ask anytime we look at a process. Even for us, because we build agents for our internal processes, we look at the process and say, okay, first, are there rules that define this process? Because if there are no rules, or it's good to break rules, AI is not going to work. Do we have a single source of truth for this process? Like, do we have a CRM system, and like, or do we have multiple email threads in a spreadsheet and somebody's text message as a single source of truth? Because if that's the case, AI is not going to work. And then the third question is that, do we have an abundance of data that shows input output kind of, so like what goes in and what should come out into a human decision? How can AI learn? Because if there is very little data, for example, we cannot automate investment decisions because there's very little data. 125 investment decisions for companies that are quite different from each other, very hard to automate.
Very hard to automate. Yeah. Very good. Last question. Given all these things that we have discussed, when you write a pre-seed check, you said you do pre-seed and seed from one fund and Series A from the other fund. When you do a pre-seed check, what do you want to see in the company?
In the founder. We like a lot of times on pre-seed, there's like the company is just one or two founders and then nothing else, and maybe ideas.
And even if they have like an idea, understanding on the market, we realize that everything can change. The product, how they apply it, but but the founders most of the time will stay.
So you're
So-
investing in the founder and the founder's track record, and the rest can change.
Not necessarily track record, but like, so what the founder's track record informs us of is what kind of founder market fit they might have. So what markets are they proficient in or passionate about, and how attractive these markets can be. And then second, like, we ask 3 questions. We're like, number 3, would I go and work for this founder? Like, can they hire the best people? Can they raise enough money for the idea they're building? And the third is like, can they actually execute? Do they have the skills or ability to put together a team that can execute? So these are just like 3 questions. And then Marina has a very important 4th one, is like, what is their really mental state and motivation? Why are they doing this right now? Because a lot of times, especially with repeat founders, you might find somebody who's just doing stuff because they're bored, or because they're angry at the world, because their previous company was a failure and they want to like prove something.
Or because they think it's logical based on the experience, like it's a logical move to do that, but they actually do not have passion.
Yeah, but a lot of times you can fall into same problems. It's like, you don't want to invest in a founder that keeps selling their companies for like 20 million after like 2 years or 3 years, because it's going to be another 20 million exit.
So that actually speaks to your investment thesis. There is actually a whole segment of investors who are investing in those kind of companies that are bootstrapping or seed-strapping to exit, and they're doing great. If you look at Carta data, actually it's the sub 10 million funds that are exiting, that are doing fast exits, is where huge returns are happening.
That was our previous fund actually, and the problem is that your returns are distributed like from 1 to 2x. It's like very hard to lose money on that kind of fund, but it's very hard to make any money. And then like a lot of LPs would just look at that and say, hey, yeah, this is amazing, but like I can just buy like an index fund and it's gonna outperform me.
But for founders, if you can build a company, and especially right now, given what's going on in the market, you can build very lean companies.
That's true.
Very lean, yes.
Super lean companies.
Yeah.
And if you build a very lean company and exit, you have raised less than $1 million and you exited $20 million. That's a great exit.
So like, if you think about it, it's not that great. So let's say three co-founders, and you raised $1 million. So
there's a lot of solo entrepreneurs working in our orbit. There's a tremendous.
Oh, I mean, like, yeah, solo
entrepreneurs kicking
solo
ass
founders
right
selling
now.
for 20 mil is
a
great
very good situation.
It's very hard to sell like a solo founder company to corporation for like 20 mil. It's probably going to be like 10.
Oh, look at Base 44, solo entrepreneurs, 6 months, $80 million exit to Wix.
That is a success story. Yeah.
That's a fabulous success story, and that's happening it more and more. Anyway, this is a great conversation. I'm glad you reached out. I'm glad we had you over, and we'll continue the conversation in a few months. And as we learn, as you said, in 2 months, we're making 20 years worth of progress right now. So things are going to change.
Oh, it's going to be crazy. Yeah. Like I'm going to have a robot body.
Soon. Yes, indeed. All right. Nice to meet you.
Likewise.
Good luck to everybody.
And yeah.
Folks, we're going to switch to the entrepreneur pitch section of the discussion today. I believe we have 3 pitches, and this is, by the way, this is a safe working session. This is not Shark Tank. We're not here to embarrass you and entertain audiences. This is a safe working session. We're going to work on how to address your issues and answer your questions and try to find strategies that can help you move forward. If you disagree with my feedback, that is entirely your prerogative. It's your venture. You do what you want. So we're going to start with Jacob in Bangalore, India. Jacob, please unmute your line and let's get started.
Morning, ma'am.
Good morning. How are you?
Good morning. All good, ma'am. Thank you. Thanks for the opportunity. I'm new to this, so in case if I make a mistake, please forgive.
This is a safe working session. What did I say?
Yes, but anyway.
No
I
need to be
understand.
nervous. Go ahead.
Right. Yeah, sorry, little nervous because, like I said, it's for the first time. So, ma'am, coming to the organization. The name of the organization is NETSPOC Telecom. The name NETSPOC is a short form for Networks Single Point of Contact. SPOC stand for a single point of contact. Basically, the short form for a single point of contact. Now, uh, talking about the organization, we predominantly cater the services to the B2B segment. I hope I'm audible.
Yeah, we can hear you fine. Go
Yeah.
ahead.
Yeah. So basically, in generally, I'm not sure you heard about a solution called MPLS. This was one of the premium solution which was in a telecom industry. This is something which was used to connect the multiple branches across the places. Let's assume if I consider India. So you have, let's assume I have 25 different or 100 branches across India. Giving an example, Lenskart. Lenskart got 2000 branches across India. All these branches used to communicate each other through a solution called MPLS. It is nothing but multi protocol label switching. Now, MPLS is an old technology and it was a very costly technology.
Mhm.
Now, there is a new solution called SD-WAN which came and replaced MPLS. So SD-WAN is a very simple box which can have any sort of internet. Some sort of internet is required. So the boxes will start communicating each other. So
Okay.
that it creates a VPN between all the branches. And it is a safe path for the branches to speak to the head office. It's basically a virtual path, virtual safe path. No, sorry, I don't want to complicate. Now, so while people started moving to SD-WAN technology, that is when we identified there is a gap for internet services while they moved to SD-WAN. So they've started facing issue in terms of sourcing internet, getting it delivered, managing it, and basically ensuring the SLA services. Now, this was actually a major problem, or even today it is a major problem for organizations who have multiple branches across India.
Okay.
Okay. So now what we do, basically, we act as a single point of contact for a pan-India internet services. Again, just putting out a name called Lenskart. Lenskart is one of our customer. So if Lenskart have 2000 branches across India, we are the one who is in charge for identifying the internet services for them, getting it delivered at their new branches, monitoring it during the working hours, ensuring the technical support to the branches. So my job is to ensure they have a stable internet at a very cost-effective mode. So the
Okay.
alternative solution is a solution called internet leased line, which is almost 4 times or 5 times higher than the cost. So in market today, there are only two options: either go with a costly solution called a lease line, or go with a lower solution called broadband, the one which you use at home. So there is no third solution which comes in between. So everybody requires a stable connectivity at a low cost.
Okay.
So that is when we designed a solution called managed broadband solution for organization who have multiple branches. Now,
Okay.
why this organization is basically they don't worry about a latency or any. They need a stable internet connection at any point of time. So they don't worry whether the latency is high, the latency is more. That is not affecting them. But if I
Okay.
go to a software company, for them latency matters. So this organization, the one which I specifically said, retail, all multi-branches, they don't worry
Yeah.
about latency. They need a stable internet at any point of time to ensure the billing happens.
Okay.
So that's when we created a solution for them called end-to-end managed broadband solutions. So while it comes to the solution part, you can see that we act as a single point of contact for a customer with a 99% uptime. So it can be a single link or it can be a dual link if customer requires, if it is a very serious business.
Jacob, do you have a slide coming up that talks about what is the customer situation? You talked about one customer already, but are there more customers?
Yes. I mentioned about two customers there.
Two customers.
yeah, the situation is almost same for every case. So if I go to, let's assume this is Jubilant Group. Jubilant Group is the same group of the Domino's. So they have an automobile division which they cater for OD, the brands like OD, MG, Nissan, Mahindra, Ather. It goes like that. They have a couple of brands which they service across India. So we are the one single point of contact for Jubilant Motors. We support them in terms of ensuring a stable internet in
That's
all
fine.
their
I got it. So you
outlets.
have 9 such customers.
Correct, ma'am.
You have 9 such customers. Average deal size is 15 lakh per annum, and it's an ongoing. It's an average recurring
It's a,
revenue. Yes.
yes. It is. If I consider this 15 to 15 lakhs, I consider for an year. There are some customers who bill at 30, 35 lakhs. There are some customers goes up to 40 lakhs. There are some customers at somewhere around. Initially, we onboarded. If I look at Blue Dot and DHL, that we onboarded very recently. It's very new to them. So
Okay.
the hunting job is over. We are getting into the farming side of that. So now we need to build the business there. We proved it. They onboarded. Now I need to build it.
Okay. And so you're doing about 1.7 crore recurring revenue right now.
It is in INR, ma'am. Yes.
No, I got it. So 1.7 crore in recurring
Correct.
revenue,
Correct.
annual recurring revenue.
Annual recurring, and it keeps adding every month. Yes, around some 10, 15, around 10 lakhs it gets added.
Okay. Got it. So
Yeah.
ask me your questions. I think I understand what your business is. I understand what the situation of the business is. What are you trying to achieve, and how can I help you?
Okay. Ma'am, again, just to ask, you are in this page of the competitors. So I just want my requirement also lies here. Now, if I look at my competitors, predominantly I compete with big time players like Airtel or Tata. So now there are something which we can do which they can't do. So even if it is a Airtel have basically Airtel. While I look at Airtel is not present across India. They have limitations. There might be if there are 50 locations of a client, they might be able to survey 50% is the maximum. That's the best number. Generally, it is 15-20%. So rest 35 locations are unserviceable for them. So in our case, we don't have any limitations. We basically we work with almost some 700 plus player. So we identify dual links at all these places. I ensure all these locations are connected. So that's why clients give more preference to vendors like us.
Yeah.
Okay. Now, the help what I require, we have developed a device. Basically, it is a communicator device which is fixed at my client's location, which communicate back to me, to my network monitoring team about the link's health. So basically, this is basically you can consider it as a sniffer. It tells me whether the internet is working or not, how fast it is working, whether it is going down or so. I need to. So basically, I am looking some help basically in terms of developing this solution to a next level. Basically, the IoT currently we have developed a prototype, so we might be requiring a decent. Basically, I'll come to that funding part. Basically, that will definitely help us to develop a device and deploy it all our locations. In the future location, wherever we are going to deploy, we will be deploying this particular device, which will help me to control the internet in all these places at a much better level.
And is this something that could be used by Airtel and the others as well?
Of course, it can be, but we would like to keep it between us so that we will have that upper hand. This solution was not available, so we had to go all about. Basically, did couple of prototypes. We developed something for my use. So yes, this can be used for Airtel or anybody else. But as of today, I am not sure whether I should be basically extending this to Airtel or
so those are the strategy questions that we need to answer.
Okay. Yeah. It is possible.
What business are we building here is the question that you have to answer. Are we building the question of this? Are we building the business of providing these solutions that you are doing right now? You have 9 customers for which you provide the full soup to nuts solution of managing their internet service, multi-location internet service. Is that the business? Or is the business selling this continuous monitoring IoT product? And the strategies for those 2 businesses are different. And that's a question I can help you answer. I cannot help you answer right this minute because we have to do some analysis, we have to do some modeling and so on and so forth, because you have to present why you're making that decision. But I know how to guide you to make that decision and how to develop the strategy for it. And that, I think, is the first thing that we need to do. Before you raise money, you have to figure out what business are we building. And then we have to figure out whether that business that you want to build is fundable or not.
Understood.
Okay, so that's go ahead.
No. If sorry, I'm too early to answer, but I might be focusing on the service side instead of this IoT device, because that can be replicated at any point of time for anybody over a period.
So you want to build a services business and keep the device as your competitive advantage, as a tool that helps you scale that business and gives you margin from that business. That's fine. This kind of services business tend not to be financed. That's something that you have to finance from your generation, but there are, banks would finance this kind of business. You have a substantial business. So this is business, if you need, working capital or you need infrastructure, that can be financed from banks.
Understood.
But this business can be grown very significantly given what you're talking about with good strategy. I think, how long has it taken you to get to 9 customers?
1 year. We started, April, 2024. We did a POC for a couple of locations for Jubilant Group. That was like some 5 locations. We did a trial for 3 months. Then they were happy. Then they started migrating all the locations. Today, we predominantly deal with basically Joy Alucas, Lenskart, Bajaj, Rendo Mojo, V-Guard. So it goes on. Anybody who have multiple branches will have this pain point for sure.
Yeah, no, I think it's a very nice business. And I don't completely disagree with your decision to go with the services business, because this is a kind of services business that actually is going to be fairly large accounts. I mean, the accounts that you have landed can be expanded to fairly large sizes. And I think there's a very clean strategy that you can do to land more accounts. And if you need help with that, we're happy to help you. But I think this is a real business, and that's great.
We will be deploying this device at Airtel and Tata, because Tata themselves, same time, Tata or Airtel is my partner as well as my competitor.
Yeah,
because
that's right. That's exactly right. That's right.
So whenever they acquire a client, they will require my help.
They will require
at
that.
Those locations, I will be deploying these devices. So, like I said, my focus will be predominantly more on developing the solutions, getting the customer with the solutions.
Yeah. No, it's a very nice business. I think it's a very nice business, and I think you're going about it the right way. So I don't see why this cannot be a fairly large business, actually.
Yeah, because again, it was the friends and family money. So we tested, tried.
How much money
very successful. We started with around 15 lakhs Indian INR.
That's amazing. So you've already 10x your revenue. So
yes, in 15 lakhs, we spent almost some 6 lakhs in terms of the software. We have an in-house software, basically a CRM. Because there is no specific CRM which is available for this type of business. We had to build everything from the scratch. So basically the working capital was around close to 10. And the advantage for this line of business, it is a prepaid money. For a customer to use it for next 3 months or 6 months, you need to pay him in advance.
Yeah.
So we went only on that model.
Yeah, that's great. How many people do you have?
We have a very small team, 8-member team. So 8 members and 2
Fantastic.
founders.
Fantastic. Fantastic. Okay. Well, we can talk more. Let me finish the other 2 presentations. We can do more Q&A after we are done with the other 2 presentations.
Yeah, man. Thank you. Thanks for the time.
You're welcome. Ellie is next. Ellie, please go ahead. SOREYA.ai.
Hi, thanks for having me. My name's Ellie. I'm based in Cambridge in the UK.
Yeah.
So what I'd like to talk to you about today is my AI mentor for women in STEM. So the problem I'm trying to solve is based on my own background. So I started my career as an engineer in the defence sector, and I was always the only woman. I was the only woman in the room, the only woman in the building. I never had female role models. There were no women in senior leadership. I never had a mentor. I never knew where to find a mentor. And I was thinking to myself that there must be other women in similar positions, isolated, no network, don't know where to look for a network. And I was wondering if I could help these women. Could you skip ahead on the slides, please? And on to the next one, please. So my idea for a solution was to create an AI mentor and train it on the experiences of real women in STEM fields. Sorry, Molly, out.
So,
Sorry.
when you talk about STEM fields, there are a lot of STEM fields. And there is actually, because we are in the internet age, there is a lot of networks that people can access. For example, if you talk about tech entrepreneurs, we get a lot of that audience. And you know, we support women entrepreneurs very solidly, and that's something that we are very easy to access. And we would invariably be more effective because this is something we do, we specialize in. Now, if you talk about people in biology, for instance, in pharmaceutical research, there are a lot of women working in pharmaceutical research. There are women working in biotech. There are women working in coding. There are women working in finance and tech-enabled finance, quant, and so on and so forth. So each of those are different applications of STEM, and your personal experience is also that. It's STEM in UK defense is a particular field, and even within that, there's going to be all kinds of specificity. So what specifically do you want to go after, and where is the data set that you're going to train the AI on?
So I'm collecting experiences from women in STEM fields. I'm looking mostly...
Collecting how?
So I have a survey asking questions, and women can share as much or as little as they want, and obviously it'll all be anonymized before it's used to train the model. The reason I wanted to go about it this way is that most LLMs have an inherent gender bias purely because they're designed by largely male teams, they're trained on largely male data. And
that's a highly manual process. It's going to take forever to get any significant body of training data with which to build something like this. Is that a scalable process?
Well, I thought it was worth a try. Like, my background is in corporate. I've never tried something like this before, and it's something that I wanted to try to see if I could help people.
Let me give you an example. This is very much top of mind in my team right now, because at the moment we are working on offering kind of like a digital twin product to our mentoring program.
Okay.
And just to give you a sense of the training data that we have available, every single one of our 690 6 roundtables, recordings are available. That's an enormous training data. We have curriculum data, we have case study data, we have 20 years of blog publishing data. And, you know, if you add all that up, that's probably, you know, over 100 million words to train an LLM with.
Yeah.
So that cannot be created, that, you know, something rich like that cannot be created with, you know, surveys.
Yes.
And there's a company you should look at that we are actually working with right now. We haven't yet finalized, but we are looking at it. It's Delphi.ai.
Okay.
And they are offering different kinds of training data on which, or they're offering the model on which you can insert training data and train the system to provide. You could build your technology on top of them. For example, they have tiers where you have 5 million words, you have 12 million words, and then you have unlimited words, etc. But really the differentiating factor for you is going to be what training data are you going to train this on, and what specific segment of STEM, women in STEM, are you going to go after? Because I can tell you, in our world, in the technology universe, you know, computer science, there are tons of this going on, and you should do some very serious competitive analysis before you decide on where you are going to position something like this. So I would say 2 things. One is, I think you should build this on top of a platform, and there is Delphi, there's other like that. You should look for a platform on which to build this. You need to figure out what kind of STEM mentoring are you going to offer? Where is the gap? And thirdly, what is the training data for that particular positioning? Yeah. These are the 3 questions that you need to answer.
Okay.
Okay?
Yep.
That's it. That's really my feedback.
Thank you. I appreciate it.
You're welcome. All right. Sanket from Bangalore again. Sanket, please unmute.
Yes,
Yana.travel. Go ahead.
Yana.travel. Yeah, first of all, thank you so much for giving me the opportunity. And
pleasure.
Yeah. Next slide, please. So, have you ever traveled in a group trip? I mean, have you ever traveled?
I have, and I've organized it, and it is awesome. Very cumbersome. Okay. It's a problem that I'm intimately aware of, and I resonate with. But there's a caveat. There's a but that I have to tell you right now. I've been seeing group travel pitches, technology for managing group travel pitches for the last 15 years. So this is not a market that is virgin. How are you going to deal with there's a lot of competition out there. So be aware of that.
Yeah, I definitely agree. So so we started this because one of my friend also, he had booked a group trip. I mean, with his wife, and only on the day of the trip, when he met all the other co-travelers, he realized that most of the other co-travelers are senior citizens, and it was his honeymoon trip as well. So not just him, most of us are little afraid to join any group trips with random people, because we don't get to know the insights of the group, or we don't get to know about
who else is on the group.
Who else is on the group. So that is why we are building. So that is the first problem that we are solving. And the second problem is we interviewed almost around 100 travel hosts who organize such group trips. So after talking to them, I understood that they're still using manual, Google Sheets or manual processes to send the booking confirmation emails, or maybe WhatsApp messages or reminders. And they have kept some interns to message, to respond to the DMs that they get on Instagram or WhatsApp, all that. So the solution that we came up with is, could you please go to next slide? So we are building a Shopify for travel hosts, group tour operators, and Amazon for group trips. Okay, so Shopify for group tour operators, as in we have built a dashboard for them with multiple automation tools. One is the trips that they add in the dashboard, they also get a microsite so that they don't have to build their own website. So for example, host named Truckup Karnataka, they get truckupkarnataka.yana.travel, and some other host wheels to wilderness.yana.travel. So they don't have to spend money or their effort on building their website, and even most of their backend operations, they can get the bookings from here. They can accept only partial payment. They can add different what do you say, packages, and they also get some automation tools like Instagram bot, WhatsApp bot, a very strong CRM system, mainly for travel niche. So
Okay.
this is for the host side, and for the traveler side, we are building a marketplace where people can find the trips that matches their vibe. Like we are asking hosts to host trips like music lovers trip, or founders only trip, or like women only trip, or people who love to act. One actor
Singles,
can join. Yeah. So
senior
community based.
citizens. Yeah.
Yeah, and
Okay.
not just that, they should be able to view the details of the people who are joining the trip beforehand.
Yeah.
Okay. So yeah, why now is most, if especially after COVID, most of them travel a lot, and even the Gen Z people, they like to meet new people almost every weekend. And even this I mean, multiple different states in India, they are investing a lot in tourism to attract people from other countries and states as well. So yeah, you can move to next slide. I'll skip this in the interest
So,
of time.
why are you skipping this slide? This is one of
Okay.
the more important slides at the moment. Is that how big is this market? How many tour operators are there? If you're, talking about Shopify, Shopify has all the world's e-commerce businesses at their fingertips as their
Right.
target market. So, what is your target market? How many group travel operators are there in the world?
Yeah, as per the statistics that we got, so in 2023, there was there is a link there. So there are around 3 lakh, that is 300,000 travel hosts across India, and
300,
it's including, yeah,
tour
yeah,
operators,
tour
group
operators who,
travel.
I mean, yeah, but that includes the unregistered tour operators also. So there are people who host bike rides, who host trips, who host wellness corporate retreats, or wellness
And what are
trips.
you charging? What are you charging? Yes, there we go. Revenue model. Go ahead. Go ahead with the revenue
Yeah,
model.
we are charging them subscription plus commission. So minimum subscription is $4.99, for which they can accept 12 bookings through their microsite, and from the 13th booking they'll have to pay 1%. So similarly, 1499 has a little higher threshold. So this is only for the, this is just a what do you say, replacement for their website, but they get much more than that. They get to see the analytics, they get Instagram bot, WhatsApp bot, all that, and those features are upsells. They have to buy it as an add-on, so they'll
Okay.
have to pay an additional amount for that. And then for the marketplace, which we are still building, and that will take another 1.5 month to release.
So where
For
are
that,
you? Give me a sense of where are you have already start. You
uh,
have already launched the product.
yeah, we have already launched the product. The B2B side is already there, the dashboard for the travel hosts. We have, so that was launched 5 months back. That 5 plus hosts started using it.
And they're
And
paid. This 35 are paid.
so initially we didn't keep any subscription. We had just kept it as 1% per booking. So they were just using it as their own, I mean, as a website. They were not taking any bookings from us. So now from last month, we started asking them to subscribe. So 10 plus hosts have started subscribing to this, have
Okay.
subscribed to this.
Okay.
And more than now more than 1,000 bookings have gone through the microsites.
Okay. All right. So it's a validated idea.
Yeah.
Okay.
So, yeah.
What do you need
So,
help with?
right now we are, I mean, we are still building the marketplace, so that marketplace will take another 1.5 month, and we are not looking for funding as well. because
I
we
don't
want to
think you
keep it
should look for
bootstrapped.
funding yet. I think there is a question mark around the market size still. What you need is a bottom-up TAM analysis that I don't see here. Bottom-up TAM analysis is based on your revenue model and your business model. So that you need to calculate, and that's going to be the driver, whether this is venture fundable or not. But you don't necessarily need to do venture funding either. You can build this as a bootstrap business, and that's fine too.
Yeah.
So where do you need? I like it. I like it very much, actually. Even if it's a relatively small business, you can still build, at an absolute scale, you can still build a substantial business. It may not be a venture scale business. It may not go from $0 to $100 million in 5 to 7 years, but you can still build a very substantial, profitable business, and that's fine. As far as I'm concerned, that's fine.
Yeah. So one thing I want to ask is, should we, since there is no AI part involved at all here, so we can, of course, initially we had built so this I started actually 6 years back as a hobby project, but the idea was completely different back then. So whatever idea I just presented,
and you're doing
was
this full time now?
Yeah, from past 1.5 years I've been doing this full time.
Full time, and you're making, you're starting to make some money.
Yeah, that will hardly cover the charges of the interns. So I'm not taking any salary from past 1.5
Are
years.
you a solo entrepreneur?
Yeah, my co-founder is he's doing it part-time.
He's doing it part-time. And so it's just the two of you and interns?
Yeah, 2 of us and interns.
Okay, so it's a very lean team, and it sounds like you have started to get conversions from your trial accounts, and you have a sense that product is working. You can start building on that.
Right. And also, sorry. So should we? There was one host from Africa who. So I was part of UPG Baishara 2025, where they. So every year they have a 3-month course where they select only 250 entrepreneurs across the globe, and I was also part of it this year. So one host from South Africa, she hosts group trips, and she also liked the product. So she was asking if they can start using our platform. So do you think we should expose it internationally, or do we have to first validate it?
Absolutely, you should expose it internationally. Why not?
No, I mean at this point of time.
Yeah, I mean, is there something in the product that is India specific and will not work internationally?
Yeah, international payments. But yeah,
not
we can connect directly.
Handle international payments. That's if the product is not capable of handling international, then you cannot do international. So that's the limiting factor. But if you want to, it's fine. If you just want to do India first and get this to, a significant revenue business so that your costs are covered, this is something that you can do as an extremely lean company, I think.
Right.
Because I do think this is going to be possible to do as a product-led growth. How are you? So give me an idea about how you're acquiring these tour companies right now. You say it's cold calling. You have to actually call these people to talk to them.
Yeah.
To get them to.
Right.
Yeah. That is a limiting. That is a scalability factor, limiting factor.
Yeah, I've kept some interns for that so that they can talk to them in their local language. So because in India, there are many regional languages, right? So if I call a host from a different state, if I don't talk to them in their regional language, they don't respond properly. So I've kept student interns from specific states so that they can call their state-specific hosts.
Okay.
Yeah, that is how we are acquiring the hosts as of now.
Okay. So, so was that your primary question of whether to go international yet or not?
Yeah, that is. I mean, if you have any other feedbacks, also, I was just open to it. I didn't have any specific questions as such.
Okay, well, keep going then. I think it's it's an interesting business. I think it's a real business. I think you can turn this into a significant business.
Okay.
And yes, there is competition, but it's not necessarily. I think what you're talking about is a platform for tour operators. That's not necessarily something that probably you have as many direct competitors for. Is that what you're discovering?
So this slide, is it? Yeah, there are a couple of competitors, but most of them are. So after interviewing all these hosts, we understood that most of them are not adding it in any of these platforms, because these are all customer centric. I'd say we are building a platform which is host centric, where
B2B,
they can
yeah.
accept only.
You're doing a B2B.
Yeah.
Yeah. So
Right.
and there's a track in our program that we call SaaS enabled marketplaces, which is what you are trying to build.
Right.
You're trying
Right.
to build a SaaS, get
Correct.
a certain number of SaaS businesses that will bring you customers onto the marketplace, and then you can open it up as a marketplace and get the commission revenue. That's what you're trying to build.
Right.
We know exactly how to
Correct.
build those businesses. So if
Okay.
you want to join the program, I will be able to guide you very precisely on every step of the way.
Yeah, sure. You could, if you could share the details.
Go to the website. I will talk
Okay.
about just a second. I will talk about the how to use the program in just a moment. So
Okay.
hold your questions. Let me just explain to you how to use 1M for those of you who are interested in using the program, and then you can ask more questions after that. So everything is at 1Mby1M.com. It is a virtual program, and anyone from anywhere in the world can use it. So no restriction on geography whatsoever. And it's the premium program is our full acceleration program, where you get strategy consulting in this format. This is the format, but it is members only. It's in the private roundtables where we do the strategy consulting like this. We do, for those of you who are trying to raise money, we help you become fundable if your business permits that. There are, fundability metrics that we have to get you to. And then we work with a large network of investors, and we'll be happy to introduce you there. We have a terrific curriculum. So this SaaS-enabled marketplace, we have curriculum and case studies on SaaS-enabled marketplaces, what has worked, what has not worked in that curriculum. So it's a very much a case study-based program. Whatever you're trying to do, there are case studies that will help you learn from other entrepreneurs who have done that particular kind of business. I'm a major influencer on LinkedIn, so we do also let you access some of that influence. If you want to just start with the curriculum, you can. 1M Basic is our curriculum only program. Premium is $1,000 a year. Basic is $99 a month. And then you can go to the website and look around to see what to expect from Basic, what to expect from Premium. We do get requests for one-on-one consulting. We do offer one-on-one consulting. It is more expensive. It's $1,000 an hour. So you don't necessarily have to, but if you desperately want one-on-one consulting, you can get it. Upcoming free roundtables are all of August, basically Thursday mornings, Pacific time. If you have questions about the program after this session, you can contact Irina Patterson, irina@1mby1m.com, and she'll be happy to answer your questions. And I can take more questions now. If you want to use the public chat, or you can want to talk through your computer, let us know if you want. If you are not on the panel, if you're on the panel, you already can unmute and ask questions. If you're not on the panel and would like to talk, you're very welcome to let us know, and Maureen will put you on the panel and you can talk through your computer as well. Shiva Ganesh wants to pitch. Today we don't have time to do more pitches, but Shiva, we can do next week for sure. Maureen will schedule you next week. You're welcome. Just make sure that you register for the next roundtable, and make sure, and Maureen will be in touch with you. If you have sent her the pitch, then she'll definitely get you on the next session. Anybody else? Any questions? Any other?
Can I ask a question? Jacob here. Can I ask?
Of course, Jacob, please.
Yeah. So basically, I was thinking whether we can offer the same services to an international client. Let's assume somebody who's there in Singapore. So we will not be providing the internet services instead of that, because these services will be requiring some sort of licenses from the DOT. So if you talk about India, it comes under Department of Telecom. So
It is going to be a
sim-
much more expensive go-to-market strategy. So my recommendation to you would be to become a bigger company before you take that on. Because right now you've built something on a shoestring and you have generated good revenue. You've really executed phenomenally well on a shoestring. So you have clearly cracked the nut on building a business on a shoestring. And that is possible in India. It is not going to be as easy if you go international because the go-to-market is going to be more expensive. So I would suggest that you first, and if you don't provide the internet service and everything, then it's going to be a half-assed solution. It's not going to be a complete solution. And that's going to have less value. But in this case, you have a full solution. It's called the whole product. You have the whole solution. And I think that is of much higher value than a half-assed solution. So the answer, the net answer to that is I wouldn't go outside of India right now.
Thanks, ma'am. Clear.
Yeah. Anybody else? All right, folks, if you are done, then we are going to meet next week and you're very welcome to come back. You can speak to me, pitch and get feedback once for free at the pre-roundtable. After that, you need to be in the premium program to actually talk to me on a regular basis, but you're most welcome to join the premium program. Thank you very much.
Ma'am, just one more
Yeah.
one more question, if you don't mind. So do you think, are we fundable? The reason why I'm asking, again, going back to
You're
the
not
fund part
fundable.
is on.
You're not fundable. This
Okay,
kind of
okay.
service is not going to be fundable.
Understood. Got. So we need to again continue sourcing it from the friends and family.
But why do you need you're making 1.5 crores, you have 9 clients, and these clients are increasing in size. So there is already growth built into your P&L. Why do you need external capital?
There
At the
are
moment?
another business yeah. So we need to start funding. Let's assume a big client. Giving an example, Ola was basically planning to launch 2,000 branches. So we had this requirement, and the initial investment which was required is somewhere around 50 lakhs, because there is a firewall involved, there is an access point involved, there is an internet involved. So 50 lakhs is the project value in the first year.
If it's a project that a customer has needs of, that the investment needs to be financed by the customer. You negotiate the contract such that there is an advance that they pay that covers those costs. How big?
Of course, it happens.
How big is the contract?
Sorry.
How big is the total contract with Ola if you want to do this?
That was, anyway, I backed out of that. That was in the initial, we got it some 6-8 months back. So the 1.7 which I'm talking that is something which we developed in last 6 months. Prior to that, it was in 30-40 lakhs. Now, Ola was altogether somewhere around 60 to 70 lakhs. In that, at least if I don't have at least at least some 3 CR in hand, we will not be able to start executing it. So only once it is executed, money will become.
Then you take your 1.5. Then you take your 1.5 crore P&L and go get your working capital from a bank. 1.5 crore recurring revenue is an eminently financeable, bank financeable P&L. You should be able to finance this from the bank.
Okay. Yeah.
Okay.
Clear.
All right. Anybody else? All right, folks. Very nice to meet all of you and work with you today. I look forward to seeing you next time. Bye.
Thank you, ma'am.
Thank you so much.